I make 1.5k dollars a day trading this extremely simple trading strategy. The strategy is so easy that even a monkey can copy it. The crazy thing is, last week on my 100k funding pips challenge, I made already $10,000, and this week I'm already up $5,000 on my funding pips challenge. And I'll be showing you my funding pips dashboard as proof that I'm actually making these withdrawals by using this extremely simple strategy, guys. And the crazy thing is, this strategy only takes 45 minutes out of your day. So think about it, in 45 minutes every single day, you could be making upwards of 1.5k every single day. And guys, in this video, I'm going to be showing you 3 easy steps that if you follow along, you're guaranteed to make life-changing profits by using this simple trading edge. But make sure you follow along and you do not miss step number 1. Most traders neglect step number 1 because they think it's unnecessary and they can just avoid it, skip it, right? But the reality is 99% of traders fail in the trading journey, and that's why they fail, because they skip this very vital step. So I see you guys on the charts. Okay guys, so now that we're on the charts here, let me show you exactly how you can use this insane strategy to make really good profits in the market. And that's how I've been able to make all my payouts in the last few weeks and even before that. So guys, the way it works is we start on the 4-hour time frame right here. The reason we start at 4 hours is because 4-hour time frame gives us the overall bigger picture. So in this case, we're trading gold, and as you can see on the 4-hour time frame, around here we can see it's very bullish. So the number one key thing that we need to make sure, guys, is we know how to draw key zones. The reason for key zones is the key zones get respected in the markets. For example, if I show you this right here is a key zone. If we go back, this right here is a key zone. Then we have multiple key zones. We have one right there, we have one right there, and we have many other, but obviously we don't need to draw all of them. Around there could be a potential key zone as well. So the key thing is we draw these key zones and then we drop down to the 15-minute time frame to execute our trades. The main reason for the key zones is it just gives us a bias and a direction to take our trades in. So the reason for that is, once we know our key zones, guys, let's say we have 2 key zones, we now know we want to be trading from here towards that zone, or from that zone towards this zone right here. We don't want to be taking trades here into this wall of resistance, same way we don't be trading trades down here towards the downside into this wall of support, right? That would be just a very bad idea, because these zones get respected, and how probabilities go, probabilities will favor you if you take into consideration that patterns are repeatable, and the repeatable pattern here is these zones being respected. So once we know that, how we're trading from this zone to this zone and etc., we need to make sure we can identify if these zones are respected or not respected. The way we do that is, if price comes to a zone, it wicks below the zone and it closes the body up, and then the next candle is most likely going to be a green candle, which will help us as a confluence to go towards the other zone right here. This is one way. And if price comes down here, closes below like this, or just like this, what we need to make sure is this zone now has been invalidated, but not always. There is some caveats to this, but for 90% of the time, this zone gets invalidated and we completely ignore it, and we now wait for price to move down to the next zone. So now that we know this, let's look at a trade that has made me $5,000 this week, and I'll be showing you that on my funding pips dashboard soon as well. So as you can see, that trade was taken. So first of all, we use this indicator right here, which basically what it does is, once we drop down to a lower time frame, this indicator just draws lines. For me, and these lines are midnight London time. That's 1 hour after the market has just opened after the 1 hour break. So I do overnight trades with this strategy because that's when you can catch the main direction on gold. You will have a lot of losing days as well, but you will win more because the risk to reward is very great with this strategy. So that trade was actually taken on the 4th of February, which was exactly down here. So let me show you what exactly happened. So if we do replay mode, this right here is why I came on the charts, and this is why I saw exactly this. So first thing you have to do is, once you're on the 15-minute time frame, is you need to refine your zone. So we have this zone here, we have this zone here. So let's refine these zones. This zone, easy refinement. This is our more precise zone. Here we ignore this previous one. We take the latest, the most latest zone, candle or bodies of structure, which in this case are around here. So in this case, I will actually be drawing a box around it like this, and we can remove this, and we can remove this. So this now gives us a general idea of what we're looking for. I will make this slightly bigger. So now we are here, guys. Before we enter, there is one more multi-time frame confluence that we need to analyze. That is on the 1 hour time frame. There's a very popular thing in trading which most people won't tell you, but it's called the time frame paradox. I want you guys to look into the time frame paradox. What I'm doing right now is actually eliminating the time frame paradox by using this systematical method. So if you go in the 1 hour time frame, as I showed you guys earlier, we are having the exact pattern right here where we reject of the zone and we show potential to move upwards into our next zone here. But it's not as simple as just that to enter a trade. Once you go down to the 15-minute time frame, what we have to do is now we have to get an extra confluence. This is the final and the easiest confluence. This is what I call the mechanical confluence. What that means is you draw a range and then a breakout of the range is where you enter. So we have done the hard work first, and now our entry is extremely unbiased or like hard to predict because it's going to be mechanically executed. So how we do that is, at these zones you will most likely have these kind of choppiness happening, which is a range being formed. A range, the way I see it, is 3 candles form a range. 3 candles in the same area form a range. So if you have 3 candles doing something like this, that's a range. 3 candles doing something like this, that's a range. In this case, we have more than 3 candles, so I will take the highs and the lows of these as my range. So as you can see, this is my range. So now my entry is very simple. I wait for a breakout to the top side to get my long in, which happens right here. So what we can do is we can take a long right here, put our stop loss at the bottom of the range plus an extra like 5 pips. So it'd be maybe something like here. Okay, then what we do is first we target the high that we can see here because that's a liquidity area here that we can grab. So that's already a 1.5 risk to reward trade if this ends up being a good trade. Okay, so this trade hits TP, as you can see, so we would have hit TP. Sometimes I like to play aggressive, and what I do is I target the major zone, the high time frame zone, and I do a break even at the low time frame zone here. So in this case, I'll be break even on my stop loss, and I would target the high zone right here, which in this case we don't hit, which is fine. We still managed to grab this or a break even trade. But now guys, what we can do is, okay, this is a very good example of something I can teach you. It just happened to appear on the charts, and I will show you exactly what to not do. So in this case, what you guys see is a very simple fake out. Let me explain. Look at this. price comes down, it's reacting off of this level right here. And now what we need to do is, most people are now entering their shorts. They're planning to enter their shorts, getting their extra confidence for the short. Look at this. They're trying to enter their shorts. Boom. Now all these people are short, right? If these people had a tight stop loss and a small TP, they would have been fine. But no way you can target a zone somewhere down here with this move, because this is a fake out. And the reason I say this is a fake out is our first trade never reached our main key zone. So the reason I believe we are still bullish is because on the 4 hours you saw we are bullish overall. So why would you short now? This is a fake out that makes people short now because they're not thinking enough that on the high time frame we are actually very bullish. This is a small retracement, and this is why I'm showing you right now. Look at this. We're coming back to our zone. Most likely we'll be able to respect the zone. As you see, this happens right here. Perhaps if this plays out well, we can even, okay, look at this. Okay, this is a beautiful example. 3 candle range with a closure above the zone. This is already a good enough confluence for me to start looking to long here. So either I would take something like this as my range, or I would wait for one more candle. Okay, perfect. So this is my range, a 3 candle range. You can start it from here, 3 candle range. I would put my end stop order right there with my stop loss here, maybe a little bit bigger, just to give it a little bit of room to breathe. And now my TP, I'll probably break even my order here and then TP all the way up there. So we will see this one, how this plays out. Okay, we got entered into our trade right there. As you can see soon, okay, so just around here I would have put my stop loss to break even. As you can see, extremely quick move up. We have managed to grab liquidity on this side, hit our zone, and we hit TP. Okay, so guys, now I'm going to show you my payouts and my dashboard funding pips right here. So as you guys can see, this account right here, I am up 5.69%, and this one is now waiting payout. As you can see, all the criteria has been met here. 100% win rate on this account. I made a payout last week, 5.9k. That's just a dummy trade here, and then you have this current week's payout that I'm going to be requesting in a couple of days. And if I go here to rewards, you can see I've made, since December 10th, I made 4.7, 5k, 4.4, 1k last week, 4.7k last week. This is in less than 2 months, guys. In less than 2 months, plus the next payout of 5.69%, I've made over, what is this, 25, 26, something like 26 to 30k, guys. And guys, I've been doing this for years now. Look at this. If you go to my Discord, these are all my payouts here. As you can see, multiple other funding pips payouts here. Me passing the challenge, E8 payouts, 5.5k, 6.4k here, 1.2 with the Alpha Capital Group, another one with the Alpha Capital Group, a ton of them with the Alpha Capital Group, and they're all big payouts of 6 point something k, guys, 7k, a ton of payouts with the Funded Trader back in the day. Like you see, it's just spammed everywhere, guys. So many payouts here, and they're not even small payouts. Look at them, they're big payouts, and these QR codes still work, so you can verify these results. And these are not it, guys. If you go to my Instagram, there's a whole payout section here where I show the trades that made the payout, and I show you even email proof of the payouts and everything. It's just full of payouts here. Look at this, more payouts. Yeah, so guys, payouts on payouts on payouts on payouts. So I hope you enjoyed this video and you can achieve similar results by using all my teachings and all my strategies that I share with you guys. So I'll see you guys in the next video.